Good morning, investors. Today's market update covers key drivers including U.S. trade policy, global inflation pressures, and sweeping changes in crypto regulation. First, President Trump has announced a 35% tariff on all Canadian imports effective August 1st, citing fentanyl trafficking and trade imbalances. Despite exemptions for USMCA-covered goods, this latest escalation rattled global markets, with US and Euro futures falling while the US dollar rallied versus the Canadian dollar, Euro, and Yen. Additional blanket tariffs of 15-20% are being drafted for at least 23 countries, with 50% tariffs on Brazilian copper imports among others. Expect ongoing volatility, potential supply chain disruptions, and commodity price pressure as Q2-Q3 earnings begin revealing tariff impacts. On the economic front, U.S. labor markets continue strong, supporting the U.S. dollar and keeping the Federal Reserve on hold. Norwegian core inflation remains elevated around 3%, reducing pressure for rate cuts. Swedish consumption fell over 1% in May, hitting discretionary spending. UK GDP contracted again in May, and the Bank of England may respond with cuts in August. In the crypto space, Nasdaq's proposed Rule 5712 would enable ETPs based on crypto assets, starting with the Hashdex Crypto ETF. The SEC's fresh guidance on disclosure requirements signals mounting regulatory readiness for crypto ETFs. Bitcoin surged to a record $117,686, with Ether at over $3,017, up 6%. Looking ahead, expect high volatility as trade disputes unfold, but carve-outs and negotiation breakthroughs may provide relief. Divergent central bank paths, with the US likely on hold and Europe/UK possibly cutting soon, will continue shaping currency flows. Crypto infrastructure is strengthening, and looming regulatory frameworks may incentivize long-term institutional investment. Stay informed and agile in this dynamic environment. Until next time, happy investing.